Hi, I'm Romeo Capolasso from Tax Accounting Adelaide, and we are self-managed super fund accountants, helping people with self-managed super funds and creating wealth and a good retirement. I'm very passionate about the investments in self-managed super funds as well. But today I wanted to explain to you um, a really good reason why not to just own properties in your individual name, and why it can be really good to actually own them in super. And of course, the only way to own properties in super is through self-managed super funds. And to show you this, I'm going to just give you two illustrations of two cases. So we've got Nonna Luigi and Nonna Maria. So obviously retired, they've ended up owning 8 properties jointly in their individual names. So basically, the total rent of the 8 properties, net rent after expenses is 80,000. So between Luigi and Maria, there's 40,000 taxable income. So unfortunately, even though Luigi and Maria are retired, they've still got to do tax returns, and they're still paying tax. They're actually going to be paying on 40,000 each at 19% tax bracket at the moment, $4,000 tax each. So they're going to be paying $8,000 tax. Our second example is Grandpa Ian and Grandmother Heather, and they own 4 properties jointly, but they also own 4 properties in their self-managed super fund. So instead of owning 8 properties individually, jointly, they own 4 individually and 4 in their self-managed super fund. So even though it's 8 houses, the same net rent of 80,000, we're going to have 20,000 income, which is for the four properties owned individually jointly. So there's 20,000 each to Ian and Heather. And then they own 40,000. They own 4 houses in their self-managed super fund, which means the self-managed super fund has income of 40,000. All right, so the tax on that situation, basically Ian and Heather have 20,000 taxable income. Basically, in their individual tax return, they'd be paying no tax because 20,000 is almost just above the tax-free threshold, and with an offset called the low income offset, it will reduce their tax to 0. And in their self-managed super fund, because they're retired, their income is 0 taxed, so there's no tax there. So the wonderful tax situation that Ian and Heather are in is there's no tax for them, even though they're in the same situation as Luigi and Maria, whose tax is 8,000. By owning property in self-managed super fund, they're saving out for $8,000 of tax per year, which is fantastic. So there you go. If hopefully that's given you something to think about. If you need to talk about your super, or you are thinking about self-managed super fund, I'm not an investment advisor, but we can refer you to the right investment advice. But also we can educate you on some of the tax benefits of this self-managed super fund, structuring the properties owned in a much better way than just owning too many individually, as I've illustrated in this case. Thank you. Feel free to contact us. Our website is Tax Accounting Adelaide, and our phone number is taxaccountingadelaide.com, and also our phone number is 8337 4460. Thank you.